What's going on, traders? You made it to the SPACs attack, and guess what? My brain is back today, guys. Hit the like. What's going on, traders? How we doing? Welcome back. It looks like we only got 8 people watching us. Tears. I'm sure they'll be here soon. Let's go ahead and bring on my man, Chris Katje. What's going on, dude?
Hey, what's going on, Mitch? Yeah, great to be back here. Where are the viewers at? Looks like we're still waiting on them to join us from that other stream.
AB's sleeping. AB's taking a nap.
Yeah. Oh, it looks like now they're joining here.
Oh, they woke up. The alarm clock rang. Hold on a second. We hit the snooze button, and it woke us back up. What's going on, Chris?
What's up, everybody? Thanks for joining us. SPACs Attack here on this Tuesday. No new deals today. Not a lot going on out there, Mitch. Not a ton to talk about in SPAC land. But we'll do our best to get through some headlines and then maybe take a look at a couple sectors to put on everyone's radar with some SPACs to watch going forward.
Yeah, definitely. One of the things that I've been looking forward to is having you back because, like I've been telling everyone, I know that I can call out some stocks, but at the same time, when I don't have my brain, we can't get too far down the line, Chris. So I'm happy to have my brain back, happy to have you back. And let's go ahead. Let's jump into some headlines. We'll take some stocks and get into the watch list. Then we got some kind of industries that we'll take a further deep dive into. Stay tuned, guys. We got a nice show for you guys planned. Hit the thumbs up, hit the share down below, and let us know. What's your favorite SPAC? I want to hear what your favorite SPAC is in the chat while Chris is going through some headlines. I'll go ahead and I'll give some of my own. But let's go ahead, interact, bring it to us, and take us back like you always do, Chris, to our head.
All right, guys. Yeah, so as I said, not a lot out there in headlines, but we'll get through them. A couple analyst notes. So Stifel analyst initiating coverage on WM Technology, also known as Weed Maps, that ticker MAPS, a buy rating and a price target of $19. Good initiation here. Maps has been a decent performer since the de-SPACing, starting to go back up here. This was one that traded over $20 throughout the process. Getting that $19 price target here could see some strong interest off of that analyst note. The other big analyst note I saw today was Goldman Sachs maintaining a neutral coverage on UTZ brands, that ticker UTZ, but also lowering the price target to $20.50. UTZ brand has been, one of the top performers, former SPACs. It's traded over 10 for a long time. 52-week range, $15.98 to $30.09. This is a company that pays a dividend of former SPAC. So a nice one to watch here. And again, lowering the price target, but that's still significantly higher than where we're currently trading. And as I said, not a lot of headlines out there. We actually only got 4 deals announced last week, relatively on the smaller side for deal announcements. We had been averaging, anywhere from 5 to 7, with these hundreds of SPACs that are out there searching for targets. So we did get a deal announcement yesterday, Virgin Orbit. So we already have one on the book, but we'll see if this week we can get some more deal activity drummed up. And then some updates on some SPACs. So we have MACQ, which is merging with Adherent. We just had the company on last week. Company raised their revenue guidance by 2.5%. They also filed their S4. So the S4 is typically one of the last steps needed to set that merger vote date. So MACQ on watch, as that merger vote date could be coming anytime. This is programmatic advertising, digital advertising. Again, a lot to like about this one. RMGB, its deal closed, will trade as RNW. That's Renew, a Indian renewable energy company. And then we saw NSTB postponed their merger vote date to August 30th. Some top movers yesterday in the SPAC space still. We had RICE, Rice, up 5%. We also saw lots of D-SPAC gainers. I mean, I saw Hyliion, Proterra, Lion Electric, a lot of the EV former SPAC names all up yesterday. Big, some up double digits. The two big losers I saw yesterday that are still trading as SPACs, SNPR down 8%, and LWAC down 6%. SNPR, the vote is tomorrow, so it got past its redemption date. So not a good sign for SNPR here going forward. With shares now trading down and can no longer be traded in for that $10 net asset value. We also have the vote on the merger tomorrow, GWAC with Cipher Mining. This is an interesting one because it falls under the cryptocurrency Bitcoin mining space. Once it switches over to the new name, new ticker, this could be one that trades in sympathy with the price of Bitcoin. So keep an eye out on that one. And then BLUW also voting on their merger with Claris Therapeutics on the 27th. So another vote this week. I'm not seeing anything for earnings out there. And again, just a quiet time out there for SPACs. Not a lot to talk about. So that's what I've got today. Mitch, as far as headlines go, and as far as what I'm seeing out there in the space.
Yeah, one of the things that I've been looking at is, there's some certain leaders that have been continuing to make moves up, and I'm going to keep watching those, and we'll see how these kind of get into the next wave. I always talk about those waves to investing, right? And so right now we're in at wave. It's summertime. We're getting through that, getting into the fall. Once I think we're deep into fall, I think we're going to start seeing a re-push on these SPACs. So let's just hang out, sit tight. This is when you want to go ahead and decide what companies you really feel are winners, and when you can really do some deep information dive into these companies. Like when I was looking at Black Sky, I started learning more about how these satellites work. What are the costs that the actually expenses that the company faces? And then you can start looking a little bit deeper at the different companies and how they're dealing with the expenses. This is how you can start taking a bigger, deeper dive in this time. This is the time to do it, guys. Don't wait until the stocks start booming again, and then you're going to do your research. This is the time to do the research, because what you can do is you can go ahead and rank them based off of that research. And then when you see the technicals match the research, that's when you go after the companies. That's what I've been talking about all the time, guys. We got to combine variables, and it's not just about one variable, right? For a while there, I think you could have traded, SPACs purely based off of technicals. Now, I definitely wouldn't do that. I would definitely pay attention more closely to all three sides of the story, the fundamentals, and the technicals, because just because the story's there doesn't mean the technicals are there. And just because the fundamentals are there doesn't mean the story is there also.
Yeah, it's just like, as we've said all along, Mitch, it's just like evaluating other stocks and other sectors, right? It's SPACs are, they're a different way to go public. So it's similar to an IPO, where there's that initial possible pop, that initial coverage, the news cycle. But otherwise, you're looking at the three variables you pointed out, just like you would any other stock, right? It's a publicly traded company. So important to note that to our viewers here.
All right. So there's been a bunch of stocks moving in here. I see a lot in the chat. I'm going to go ahead and try to catch up here with the chat. Say hello to some of the loyals, like always. How we doing, Solar? Solar, what's going on? Sue in the house. What's up? What's up? Pinky up, Sue. All right, let's keep going. Born to be free. Benjamin, Julie in the house. Gabriel. Ya tu sabe. We got Happy in the house, Buffalo, Bob. What's going on, guys? How we doing? It's good to see some new faces. Roy, Rick House, like always, in the house. Is that amazing or amazing? Whoa, this guy's killing it with the screen name there. Let's keep it going, guys. You guys smash the like, support us as we support you guys and going through these SPACs. Let's keep it going. Let's get into the watch list time. This is when we go ahead and rock out a little bit. All right, guys. So we got some big movers on the list. First one up is INDI, semiconductor stock here. What's going on with this, Chris? It's pushing on up there to 1027. What's going to happen here?
Yeah, so someone actually pointed out in the chat, and I missed this in my headlines. It looks like we did get an analyst rating on this one as well. So Benzinga Pro says B. Riley Securities initiates coverage with a buy rating and a price target of $18. So remember, INDI, Indie Semiconductor, it's a play on chips for cars. We all know that there's a chip shortage for cars. And Indie's a little early here, not fully developed, but I think they could be a major player in the semiconductor market, especially, as we move to autonomous cars. So keep an eye out. I mean, this is a great analyst initiation call here, a nice looking price target, and shares getting back above $10 today on Indie. And Mitch, I actually saw when I pulled back on the 1 month chart here, we're actually getting close to hitting the 1 month high, which I believe was 1072. And if you scale all the way out, I mean, the 52-week high is 1190. So this thing's actually not that far off from its 1 month high and its all-time high since completing the SPAC process. So this could be a good step, and this could be a runner going forward.
Yeah, loving all the love we're getting in the chat. Definitely smash the like. I mean, you guys hear it in Chris. Chris came back for us, so please hit that like. Let's take a look here. Me, 23andMe, holding. Get it? Holding. But it's definitely holding that $8 price point, getting on there to the 9. One of the things that I do see is this stock is kind of in a smaller bear pattern, and the smaller bear pattern started right here on the 23rd. A lot of times what you could see is when you see on the bigger time frames, you're going to see sometimes different patterns. Like this is one pattern, then it broke down, went into a bear pattern, sideways consolidation here, broke out. Then we come back down, and when we break this little harmony, we went into another bearish pattern. The question is, can we get back above 950s? That's kind of the level where I'd see some sellers definitely step in there. So that's going to be where I'm going to be watching to see if it turns around.
And Me's interesting, Mitch. It did get a initiation last week from Credit Suisse, I believe a $13 price target. And one of the things in the call out was about the statistical power that they have. That's something we talked about, right? You send in your genetic testing and you are able to opt out. But the people that opt in, they then have all that, data available of, who has what disease, who has what conditions. And they're going to be able to, in the long run, not necessarily now, but they are working on some drug development to use that data to treat conditions. And I think that's important down the road. And I think, long term, we're going to see some more analysts turn to that side based on their data and statistics they have.
Yeah, well, I think at the end of the day, it's always like we've talked about it. How do they leverage their data, and how do they go ahead and take steps forward to innovate? Let's keep going. Let's look at Rover. You guys know how I like my dog stocks here. Hey, Rover's starting to come back. I think this is a good looking play now. We had a last run go into 1326. I think eventually you get above that level. We'll see how Rover continues, and we'll see how the numbers continue, because I expect to see massive numbers continuing from Rover.
Yeah, and Mitch, I actually learned the other day via an email that was sent to me that the 26th, so in 2 days, is National Dog Day.
Doggy Day.
Doggy Day. So make sure you treat those doggos on
I'm about to buy Doge
on Thursday this week. But also maybe we see some news, right? We see some media attention finding the dog stocks, right? Not the dog coin or Dogecoin,
Oh.
but the dog stocks. So Rover, BarkBox, Petco,
Bark.
all those other ones. But Rover, Mitch, you've been on top of this story, and it definitely has looked good. I still like BarkBox long term, but I mean Rover just seems to have the fundamentals and the technicals going for it right now. So it looks like that is the one that everyone prefers right now.
Yeah, one thing that I think looks good on this chart is that even after we did that breakout, a lot of times we've been seeing the stocks come back, not holding a support there. And this one held very well. It held that 935. Yeah, it had some wicks there, but if you really look at it, it didn't really close underneath that. And that's what matters here. Wicks are extreme price points. The close is an important thing for our daily charts, right? Because when we look at daily charts, a lot of times, yeah, you'll see wicks, but a lot of times you're going to pay attention to the close on the chart. This is very important to close above 935 each time that it broke down right here on the 17th, on the 19th, on the 20th. And if you get that reclaim on that price point, you know that at least there's some strength there. Yes, it tried to wash some buyers out. But with that being said, once you recovered, you started holding better and better each time. And now that I think we're getting towards the 11, I think you look for moves, maybe 1050s. But this one, I think eventually gets up towards around $15, and that's a Rover Group. All right, let's keep going. Let's go into another one that is bouncing back. I have no idea about this one now. Mile has been getting destroyed. It's down towards 430s. We saw that turnaround yesterday. We were actually talking about it, that it turned around at that 410. Had that hammer candy. I don't know if you guys have ever heard what a hammer candy is, but this is what they call it, the hammer candle. And I think it could start getting up there, maybe trying to close this gap up there towards 680s. We'll see if Mile can get moving here. One of those that I think, if you look at the story is not a bad story. The fundamentals aren't matching, and even worse are the technicals.
Yeah, and I mean, I think Mile has a great concept, right? The pay per mile insurance. The big questions for me are, is anything proprietary about it? Will we see the legacy insurance companies start to adapt, right? So, like when we saw commission-free trading, right? We saw Robinhood and others really take hold. They gained subscribers and customers that way. But eventually all the legacy players, your Charles Schwab, your others, they started doing commission-free trading too, right? Because they had to get with the times. They had to meet the technology and meet the customer demand. So if the customer demand is, pay per mile insurance, I just wonder what Metro Mile can do to set themselves apart. As right now, it's a great concept, but I just don't know what they have proprietary wise.
The mute button. Yeah, but one of the things that I would say is just keep an eye on it, because eventually it's going to get towards a price that even if it doesn't, let's say, pop back up because of the actual stock, I think it's going to start being an acquisition target because it's being so low and the valuation comes down with it, the market cap. And with that being said, who knows? Maybe you see $8 buyout. Could happen, right? And I mean, from this level, that's 100% gain. So it's one of those that, yeah, not something that really calls my attention to take risks, because maybe I'm just not that, I guess, risky at this moment. I'm more risk adverse with this environment, but it's not a bad one to think about, because I do think that in the long run, it either makes its way back or gets an acquisition target. Let's keep going. Let's get into another one here. Draftkings having a good day. Daily charts really starting to look good here. What are you thinking about this, Chris?
Yeah, Draftkings, I mean, they're a leader in sports betting. We're going to get into that a little bit later here. It's my favorite play. I mean, if I had to pick a stock for sports betting, I still think Draftkings. They have such a dominant number one or number two position in all the states they're in. And as of now, they're in more states than anyone else. And as you can see on the chart there, I mean, we've been calling it out, right? And we're going to say it again later on, that NFL season is coming back. college football is coming back. So I think we continue to see volume and the price increasing going into this major catalyst for them.
All right, let's go ahead and we'll definitely keep an eye on DraftKings. I think it's going to continue going. I got stopped out of this one. I'm gonna say it's my fault. That's what happens when you start trying to play the adding game. I ended up getting my average a little bit too high and not willing to hold on down towards my original entry. My original entry was actually on this first kind of pullback day. And I actually got in at 50 30s and then ended up eventually just giving it back because I added up there towards 51 30s. And then when we on this last day, when we broke down through it, I said, nah, I'm not going to hold. Ended up only going towards 50.97 that day and then turning around and really making moves since then. But not going to be mad. I still think I like DraftKings. I still think it continues to run, and we'll keep an eye on it. Let's go to one more here. PaySafe making a 4% move on up. What are you thinking now on this one, Chris, as we've gotten that huge knockdown from the low there being 1020 all the way down towards an open there of 944?
Yeah, if you look at the chart of PaySafe and SoFi, they actually look pretty similar. Okay. And they actually both kind of bottomed out over the past week, right? And they dipped. And a lot of it had to do with earnings, right? And now we're starting to see them both come back up. I don't own PaySafe, but I own SoFi. And as you see there, I mean, SoFi, similar thing. It dropped down, and now we're starting to see it come back up. But, I like both of these, right? It's the fintech space, digital payments. It's a huge growth area. I think, these just got kind of hot and they needed to dip back. And now we're going to see, the movement going forward here post earnings.
Yeah, it's something we're going to watch. One of the things that I do like is that we've been seeing a lot of gap fills. So this is just that same play. Gap down, fill the gap. Gap down, fill the gap. Gap up, fill the gap down. And that's what we're seeing a lot of the times right now. I've seen so many shadow plays getting filled right now. So that's a nice play right now. If you guys have never heard of that, look it up. Shadow fills happen all the time. When a stock gaps down, it usually has a tendency going up through that shadow. And then when it gets towards the top of that range, it usually turns back down. But even if you can capture that move right back through the shadow, it's usually going to give you a good gain. All right, Chris, let's go ahead and let's jump into some of our industries today, and then we'll go back towards the watch list to get some stocks from the chat. Next thing up, I think we're going to get into what are we going to first, Chris?
Let's do space first. So, you've heard Mitch and I talk for a long time, right, on the space sector. And there's numerous publicly traded space companies out there, and a lot of them have come from the SPAC route. So I think it's an important sector to look at. We also have some recent news, right? So I saw someone in the chat asking about VACQ that's going to become Rocket Lab. That new ticker is RKLB, which is tomorrow. Their news out that they will begin their final mission design and manufacture to supply 2 interplanetary Photon spacecraft for a science mission to Mars. So we hear all the time, right? Stocks going to the moon, crypto going to the moon, crypto going to Mars. Rocket Lab is going to Mars. They're literally putting their rockets in the air and going to Mars. I mean, this is a company that has some huge deals. They have some huge rockets and relationships in that sector. I've liked it for the long haul. Also, have to call out our friend of the show, Julian Klimachko, who tweeted out that only 3% of shares were redeemed of VACQ at the merger vote. So if you've watched the show, you know that recently a lot of these deals, when the stock is trading around the $10 mark, we're seeing 50%, all the way up to 93% of shares redeemed. Rocket Lab only had 3% of shares redeemed. That means people that own shares of this, they're holding, right? They didn't redeem them at net asset value. They want to see this through. That's what a SPAC should look like. That also helped them get cash of $777 million, which is going to help fund them going forward. So there shouldn't be as big of a concern with Rocket Lab needing to raise cash, right? They've got a big backlog, and now they get the cash from this SPAC deal. So I think Rocket Lab, as we see the changeover happen tomorrow, I think this is one that really, should be on watch. And we saw shares bottom out below $10 going into the merger vote. But if you look at the past couple days, I mean, this thing has shown strength, trading over $11 today. I think it keeps going higher. And then Astra Space, ASTR, getting a decent lift today. They had news that they had a successful orbital ignition of its Apollo fusion thruster on board the Spaceflight Sherpa. That's an orbital transfer vehicle. So this is their first attempt at firing the thruster in orbit. They also have their window opening later this week for their first commercial orbit. So that's important, right? And Astra is another one, right? Since it completed its de-SPAC, we did see shares drop down below $10, but now today we're up 5%. We're over $11. This is one that I think, again, the 1 month high looks like about 1272. I think we could get close to, getting back up there with some of this positive news and that spaceflight window opening up. And then, of course, the news yesterday, Virgin Orbit going public, NGCA. This was highly anticipated. We didn't get that big of a lift of shares yet, again, as people dissect that deal. But it's another space stock going public. And Sir Richard Branson actually spoke very favorably of SPACs yesterday. Of course, Virgin Galactic went public via SPAC, his own SPAC bringing 23andMe public. So he's had some experience with those SPACs. He also invested $1 billion of his own money in Virgin Orbit. We also saw Boeing invest in this SPAC deal. They have a pipeline of $4 billion headed into 2025 with $300 million of that in confirmed deals. I like Virgin Orbit. I think it's another way to play the space industry. So there's three there, that I like in the space sector, and they're all getting news, right? We're seeing big news in the space sector. So keep an eye out on these ones. And again, Rocket Lab changes over to the new ticker tomorrow, RKLB. So that's a pretty big news item there for space stocks. What do you think, Mitch?
Massive. I mean, at the end of the day, we've been watching space really get some lift, get some contracts. One of the things that you see is that, I mean, hey, we weren't even doing this about 10 years ago. So I think this is a new space race. Space race usually take about 20 to 30 years. So look forward. I mean, by the time I'm 60, we haven't gotten to Mars. I'm going to let you know, I'm going to be upset. So Elon, get me to Mars.
I think it's coming. I mean, that's the thing. I mean, we're sending rockets up. We're going to send rockets to Mars. And eventually, will people be on Mars? Time will tell. But companies like Rocket Lab, like Astra, they're all about, right, exploring space, making things more affordable up there. So those are ones that I kind of like, right? And then the Virgin Orbit deal yesterday, I mean, it was a $3 billion valuation, didn't get a huge lift in the shares. But I think long term, that's one to watch. But I think we will see some pressure as it continues to trade under $10 here. But space, I think space belongs in everyone's portfolio. Whether that's through a ETF or through a basket or through maybe picking a couple out that you like in the space sector. But I just think it's high growth, as you said, Mitch. Another space race is coming, and it's a good sector to invest in.
All right, so it looks like we're getting mentions in the chat. We got someone new to the stream, so I'm going to take a quick second here. Looks like they're trying to ask about Soaring Eagle, I think, SRNG here. So what's going on with Soaring Eagle, and do you think it's going to eventually get back towards that pop that we saw recently?
Yeah, so Soaring Eagle has a lot of moving pieces, and this was a large deal done. They have equity stakes in several different joint ventures. They had big news out the other day that they had a partnership with a a cannabis company. Was this, I want to make sure I get the right one here, with Kronos Group. So they announced a cannabinoid partnership. So again, they have partnerships in agriculture, in cannabis, in genetics. It's just a huge one, right? And I wrote on this when the deal was announced, and it was even hard for me to find all the companies that they own stakes in. They own a stake in a plant-based meat company. So I think down the road, if they ever spin off some of these companies or take them public, we could see a huge gap up in valuation. But right now, I just don't know if we see it get the huge lift. It just has such a high amount of shares in volume that need to trade to really move this. I mean, we saw Kathy Wood loading up millions of shares and only moving share price a couple pennies those days because it was such a large deal and has such a huge flow. But long term, I like it, but I just don't know if we see shares really take off right now.
Definitely one to keep your watch on it. I mean, when you're getting a bunch of volume to pile in before, it can very much happen where you get a pullback towards support and then it rockets off. So keep your eyes on it. We'll see if it gets that big lift. All right, let's go ahead. Let's get back to it. Chris, what are the next sector you want to get into, the next industry to take a look at?
Yeah, so Mitch, I mean, we teased it a little bit, right? Looking at Draftkings moving today. I mean, me and you have talked about sports betting for so long, right? Dating back to our first shows back in October, right? And that's just in the SPAC space. I know you've talked about it outside of SPACs as well. But we got some numbers today, some estimates, Mitch. And I mean, me and you can sit here all day and, we can say, hey, there's going to be more money on, NFL bets this year. There's going to be more money on college football. But what does that actually mean in terms of dollars? I mean, I'm not an analyst. I don't have those numbers in front of me. But, Mitch, we got some numbers today. So PlayUSA.com, which is a sports betting analytics site, they posted some estimates. So they see football generating $20 billion in bets for the 2021 season, $1.5 billion in revenue for U.S. sports books. $20 billion. And Mitch, guess what? $7.5 billion was the number bet last year. So $20 billion is almost triple what was bet last year. Close. I mean, so here you have, two big stories, right? You have more states that have legalized it, and then you also have an increase in demand. If you add those two things up, you're going to get triple the amount of bets made. I mean, that's more than I even thought, looking at this. And that's a huge, huge number. And so they're breaking it down as $12 billion bet on the NFL this season, excluding parlays. That's $800 million in revenue for sports betting companies. And then also college football, $8 billion. So $20 billion total, $12 billion from the NFL, $8 billion from college football. I mean, massive numbers, right? We've called it out. We've said sports betting. Here you get the numbers. What do you think, Mitch? I mean, $20 billion, more than triple last year. I mean, does that seem accurate? Does it seem high? Does it seem low? What do you make of this?
I'll go back to my famous line. State by state, the revenues will show. I think I've been saying that for about 6 months, 8 months now. And what is this showing? That same thing. That as we keep getting more and more of these states to go into the legal, when we get the sports books to come out, what ends up happening is we see they are taking this up. They are taking deeper and deeper sports betting. And I mean, if the industry is going to continue to grow and keep pushing into more and more states, I think next year, what's not to say that this number can be tripled? What's not to say that next year it's generating 60 billion in bets. I definitely think it could happen. And that's why I'm watching this industry. And that's why you got to be a part of these new ones, right? Like space, gambling, cannabis, all these new asset classes that were essentially created through kind of, and let's call it the millennial boom, because I think that's really what's coming. And we're going into new industries to really push those levels. I mean, this is a lot of money. There's a lot of money behind these. It's not only in sports, but like I said, also space, and also cannabis. There's going to be a lot of growth in these industries, and you got to jump on it before the growth gets so big that you can't get them at a good valuation.
Yeah, and Mitch, so Sean, my friend here, Sean H in the chat, also pointing out this estimate from Play USA. That's only football. That's only NFL and college football. That's not even the other major sports. As Mitch and I said, though, the big story right now is going into the football season. And as you saw some of these sports betting companies report earnings, Mitch, so like DraftKings last report, it was for the summer months. Those summer months are typically the slower time, right, for sports betting. And yet they still saw huge growth because of what? More states with legalized sports betting. So now you enter into this time where there's tons of content to bet on. I mean, we've got soccer back, right? EPL games just started a couple weeks ago. You've got college football, you've got NFL. And then once we get into winter, you add more sports into the mix. We've got baseball in full swing right now. I mean, there's a ton to bet on. These companies, I just think they still have room to run. Also, Mitch, I saw someone ask in the chat if there is a sports betting ETF.
What?
Wouldn't you know there is a sports betting ETF? Full plug here for our friends at Round Hill Investments. That ticker is BETZ, the only sports betting and iGaming ETF currently out there. But Mitch, there is news. There is a new sports betting ETF coming to the market, and this one is from Direxion. It's actually a leveraged, 2 times leveraged sports betting ETF. So if you're really bullish on the sports betting market, they're going to make
Did we say leverage?
Yeah, I mean, I'm not a big guy in investing in leveraged ETFs, but, for the people that want heavy exposure, I mean, it's out there. I'll stick with BETZ personally. And Mitch, I pulled up the top 10 holdings of bets, BETZ, and I mean, it's looking great.
What do we got?
Right, we've got Score Media number 1 at 5%. That company, of course, being acquired by Penn National. Then we've got Rush Street Interactive at number 2, 4.7%. RSI, and then DraftKings 4.5%. DKNG. And then Flutter Entertainment, which owns FanDuel, Golden Nugget Online Gaming. I mean, the holdings here are great, right? And as we've seen, I mean, if you want full exposure to the sports betting sector, I think this ETF could be a winner, right? And I like it. But also you have some individual companies that went public via SPAC that we have to talk about, right? We're a SPAC show. So you've got DraftKings, you've got Rush Street Interactive, you've got Golden Nugget Online, which is getting bought out by DraftKings. And then, of course, Mitch, we've got Genius Sports, GENI. We also have AUS, which is taking WynnBET public, the betting arm, online sports betting of Wynn Resorts. We've got SEAH, which is Supergroup, which owns Betway. I mean, there's a lot of options out there for people looking for sports betting exposure. Genius, I still love, right? I know you love Genius here. Going into the NFL season, right? They're a huge partner with the NFL. They already signed that deal with DraftKings. I gotta say, I like GENI here. And also Kathy Wood, she's been loading up on Genius Sports. I mean, she sees the value of the data that they have and how sports betting companies are going to need to partner with them. What do you like out there in sports betting, Mitch, and what do you make of all this?
Well, the leverage just shows you that one thing about leverage and high leverage plays is that they're more for day trading vehicles. And so what they're only going to come out with it if they see the day trading interest. So if there's day trading interest in these gambling names, that's when you usually start seeing these high leverage ETFs come out. Perfect example is oil. Oil has a tendency of what? Trending. And when oil trends, what do you want? You want to be leveraged into something. You want to be pushing into that trend because that can get you higher returns in a shorter amount of time. And so that's what these leverage ETFs are constructed for. Of course, be careful. I'll go ahead and I'll repeat. Whenever you're using leverage ETFs, they're day trading vehicles, not meant to be swung trade or invested in. Reason why is that they have to rebalance on an everyday basis versus a monthly basis that a lot of ETFs face. With this being said, that rebalancing can actually cause the price to come down. And so a lot of times when you see people use these, it's day traders trying to leverage in and get that daily momentum, like a day to day where you see what? DKNG up, PEN up, GAN up, RSI up, Genie up, GNOG up. That's the times that they go ahead and attack these leverage ones. Because if you can get in one name, why not get in an ETF that's giving you that leverage on up, which gives you diversification, yet also gives you that leverage up.
And
it's
Mitch,
interesting for sure.
We talk about ticker changes, right? Name changes. So I want to call out the two right now that haven't changed over, right? So SEAH Supergroup, they own Betway. They have a large presence in Europe and they're expanding in the US. They have entry in several states. But right now, if you look at SEAH, right, today we're seeing sports betting stocks up. SEAH is actually in the red. And I think part of that is because people don't find it. They don't associate it with sports betting. So once it completes this deal, which is tentative for the fourth quarter, I mean, this is going to be a stock that trades with the sports betting names. So on a day like today, you'd see it green. Also, you know, again, as Sean's pointing out in the chat, their chairman, he worked for the NFL for over 15 years. We had him on the show, Eric Grubman. He was on our show, right? And he talked about his relationship with the NFL. They've got strong partnerships, and I think those expand going forward, right? I think there was a reason why his SPAC was chosen to bring Betway and Supergroup public. And then AUS bringing WinBet public. So Win Resorts, WinBet isn't one of the larger online sports betting brands out there, but I think it could be. They could get entry into some of these states that Win has physical casinos in. And who did they just sign? Shaquille O'Neal. They got Shaq as their brand ambassador, right? And he had to give up ownership of the Sacramento Kings in order to take this stake with WinBet. I mean, Mitch, if it was you, what would you rather own? Would you rather own a stake in an NBA team right now? Or would you rather own a stake and be a brand ambassador for a sports betting company? I mean, I think both are going to gain value. I don't know, though. I kind of feel like sports betting's got more growth, right? Is that what Shaq's saying here?
100%. If you look at it, there's only a couple sports teams that grow, let's say, double digits in a year amount of time. And those are going to be high-end markets. And if you're not in a high-end market, and let's just be real, if you're in the high-end market, you're having to put up so much capital that, I mean, then you have to ask yourself, is the return worth it too? Same thing happened, let's say, in the Warriors. You try going to take a stake in the Warriors right now. Not going to happen. Let's just say that. But this is the exact approach. It's where's the growth? The growth is in sports betting right now, not in the sports leagues. And so if the sports leagues were looking to grow massively over in the next 5 to 10 years, then they would be like, okay, I'm just going to stay on the sports teams. No. What's happening here is what I call, and it's a giant move. It's the monetization of sports. Sports have been monetized for a long time in what ways, right? In networks and merchandise, but they weren't really monetized in the games themselves. Now you're seeing that. That's what sports betting does. It takes advantage of something that you already are producing, the content, and then monetizes it to the consumer that's watching it. Get ready, guys. It's just getting started.
Yeah, I mean, and again, that 20 billion figure, that's just football. That's just from one source, too. That's playusa.com. We're seeing more analysts come out with some of these figures, right? I mean, Mitch, I remember I've been writing about sports betting for years, and one of the things I remember is when everyone was trying to come up with the TAM, right? The total addressable market size for online sports betting and iGaming. And at first, people scoffed, right? When it was like this $10 billion figure that people saw in a couple of years. Then you had some more bullish analysts come out and say, no, I think it could actually be worth 15 billion or 20 billion. And then you kept seeing those numbers rise, right? You kept seeing that TAM get bigger. And as more states legalized it, right, as you said, state by state, it became more TAM. And then also you're seeing strong adoption, right? You're not just seeing users sign up and then stop betting, right? People become more engaged. There's millions of sports fans out there. They want to be engaged. They want to watch games and they want to feel a part of it. And how do you feel a part of it? If you're watching it, if you're betting on it. I mean, Mitch, I know personally I've watched sports that I never would have watched before because I bet on it, right? I mean, it's legal here in Michigan now. I can say that. I'm more engaged with the sports because I have bet on them. And that's something that these sports leagues, betting used to be taboo, right? I saw a lot of that over the weekend, that the NFL used to not allow advertising for sports betting during its programs. It used to just, you couldn't talk about it, right? If you were a play-by-play commentator, you couldn't say, the Saints were favored by 7 points today. But what did we get in the preseason games? You're hearing now, what's the line? What's the over-under? You're also having partnerships. I mean, where are these teams playing? They're playing in SoFi State or in Caesar Stadium. They're playing in, all these different branded naming rights deals.
And the Vegas one actually has a sports book right in it, right?
Yeah, you've got sports books in there. You can place your bets there. I mean, here in Michigan, we've got BetMGM as a partnership with the Lions, the Red Wings, where you can do free to play games. Plus, you can bet on the sports. I mean, it's huge. And these sports are these major leagues are seeing the monetization, as you said, Mitch. They're realizing the potential, and that also opens up more revenue for the sports betting companies. I mean, again, Mitch and I have talked about this for months and months, and we could keep talking about it every day. But if I had to pick one sector that I really like, it's sports betting, right? There's a lot to like there.
It's just money.
And we're going into a great time, right? And so pay attention. We do see them up today. We have seen them start to rise. So maybe wait for some dip buying opportunities here. But I think the NFL season is just going to be monstrous for sports betting.
It's just the beginning, guys. All right, let's go ahead. Let's get back to our watch list. Let's talk about some SPACs that you guys want to talk about out there. So if you guys got a SPAC you want to talk about, go ahead and throw it up in the chat. We'll move forward from the gambling. I'll try not to touch one of those names because, I mean, at the end of the day, I think this is something that Chris and I have been talking about for months. And looking towards this time, we've talked about it, that the NFL season, there's a reason why the hype comes with it. And also with that comes the bets.
Also, Mitch, we're at 91 likes. We haven't talked about it this show yet, but I got to say, guys, please smash the like. Get us to 100 right now as you're dropping those tickers in the chat.
All right, let's go ahead. Let's get into the ones from the chat. Do we got money ticker? Oh, no, hold on. That's just me. Let's just keep going. Open next up. Sue wants to talk about Open. I actually like this chart, Sue, because one of the things is we saw a good earnings report. And then what did we see? Remember how I've been talking about how there's been these shadow plays that have been all around? You got another one right here. Let me show you exactly what it did. All right, let's go ahead. Let's take a look here at this chart. We got the earnings that come out right here on this pop of the 12th. What happened? Everyone looking bullish. What does it do? It pulls back to support, fills the gap, fills down, and then just pushes right back up to it. This is what I've been seeing clearly happen to a lot of earnings reports. Even when they're good, they're coming back down towards support and then popping off of those levels. This is why you got to pay attention to a stock. I always say prior to an earnings and then after an earnings, not necessarily the earnings time, because the earnings time can always get you trapped into different positions. But after and before, you see, if you went before and you said, oh, I can think this stock could run into earnings, then maybe you were getting it off support here around, let's say, the 14.17s, 14.25s, and you were risking down underneath 14s. You could have got that pop and sold into one day. Let's say if after the earnings you were looking down and you were like, okay, well, it's coming down. Let's see if it holds the support. You see it come back down on this day. It goes to a low of 13.81. But what does it do? Quickly recovers that, gets right back above 14, actually closes this candle here at 14.92, giving you that bottom. Okay, I got something to go off of again. Let me go ahead and attack it. Maybe the next day you're getting in on this low, 1473s, and you're playing down towards 14. Now you're back up there towards 17. These are going to be better ways to attack the stock than just trying to jump in off of the earnings. Look for a move after the earnings to give you a potential entry. We've been seeing this happen with a lot of names where they get a good earnings, they get a drop down. Or another thing that's been happening is instead of this spike up, you get a drop, a hard drop, and then it's closing that gap, which is something that we just mentioned on a couple stocks. All right, let's go ahead. Let's get into another one here. What's being mentioned in the chat? Any of them standing out to you, Chris? You can definitely call them out also. I do see. Go ahead.
I just saw a comment here from Kevin, and I missed this. It looks like it just happened a couple hours ago. Hyliion, HYLN, appointed Elaine Chao to the board today. So for those who don't know, Elaine Chao, she's the former Secretary of Transportation, the former Secretary of Labor. That's a pretty big hire, right? Adding her to the board of directors. I think she also serves on a couple other boards. I was pulling up the thing now. Yep. Looks like she's on the Kroger board. She was also a banker with Citicorp and Bank of America. She's the head of the Peace Corps. I mean, extensive experience here. I think this is a good grab for Hyliion here, right? Someone who knows the transportation industry. And if you're a company like Hyliion, you want to be engaged with the U.S. Department of Transportation. Now you have a great ally on board. So Hyliion had a really good day yesterday, and I think it could continue if they can get some good news like this.
Well, if there was a bet in Vegas for it, Jimmy, I'd probably take it. Pete Rose going to the Hall of Fame. Who knows? Maybe eventually happens. Maybe you see over time with sports betting really changing. And I think that's also something that's going to be very watched upon is how do players react with sports betting? Is there eventually a kind of a crackdown because players are doing something fishy? Just keep your eyes on it. That's definitely something to note, Jimmy. I'll give you the kind of the focus there. I can't blame you for looking at the Pete Rose situation. All right, let's go ahead. Looking at what do we got here? Lucid in October. Why do people keep thinking that they're going to deliver in October? There is this article that's out. I think that is let's say positively written. That supposedly the deliveries are going to come out here in October. What are you thinking, Chris?
You know, I also saw there's a bunch of comments about there's pictures of Peter Rawlinson with holding up a four.
The magic four, bro.
So what does that mean? Does that mean we're going to get news on September 4th, on October 4th? I mean, I think if you're owning Lucid, right, which full disclosure, I have Lucid in my IRA, right? I think you're betting on them delivering, right, and producing cars. I don't know if the timeline changes much or, you know, if they meet deliveries in October, if that's going to cause shares to go ballistic here. I mean, I think, again, we're just trying to read all these clues, and until it happens, I would just say sit on the sidelines. I mean, I don't know. What do you think, Mitch? I mean, we're at 22 today. I think we hit 21 the other day. I mean, it just, again, Lucid is one that moves on news, but without news, it's just kind of dropping here.
Yeah, you know, one of the things that happens is that I talked about it yesterday. There's this low that I think some people took the shot off today. We talked about that 2158 or 2150, you can call it. Definitely someone took a shot today. I think that's why you're seeing the stock up. It's not just because, I mean, there's some news out today or a catalyst that's pushing it back up. Someone's taking a swing trade here, and I don't blame them for it. There's at least a level to go off of. I'm actually looking for that level to get tested. I want to see it get tested, come to the downside, maybe come down towards this low, let's say the 20, and then come back up through that level. That's when I would be going long into this. You guys know I took the shot on this one. I ended up could have sold this one for a 30% winner, and I ended up only making about 5 to 6% on the total gain. And this was one of those that I went back to thinking about and realizing, stick to the strategy, Mitch. There's no point. Because one thing that I started doing in Lucid, which was what happened to me, was when it went up towards that 28, what did I start thinking? Yeah, I got it. 60, baby. We're going to the moon. We got this. Let's go, Lucid. I started getting with the Colts. Let's go. Oh, it's coming back down. Oh, there goes my 30%. Okay. Well, in that lesson, what did I learn? To stick to the system. If you get the quick 30% pop, there's no point in trying to always get that 40, 60, 100% gain. You got to go ahead and take the base hits, especially when you get a quick double and a 30% gain, let's say in a week's amount of time. So, hey, got to take it when you can get it. And when you can't, it's okay to take your money and run. All right, let's go ahead. Let's wrap it up here. What other stock can we mention? One more. Chris, what are you thinking here?
Yeah, I'm trying to find some tickers that we haven't talked about here. I'm not seeing anything new here. What else we got? What else we got, guys, for tickers out there? One more ticker.
Oh,
yeah,
Mike, making me laugh. I actually saw Pete doing
Mitch,
that too.
I'm for Pete Rose being in the Hall of Fame. I mean, if you want to support sports betting as a league now, I think you've got to allow him in the Hall of Fame. And MLB in talks with Barstool Sports, right, to do some broadcasting deals. I think if you're going to partner with a company that owns a sports betting arm and then not allow Pete Rose in the Hall of Fame, I think that's almost hypocritical at this point. So
here, I got one for you.
We'll see what happens.
Let's do FFIE before we get on out of here.
Yeah, so
reason
I
why
have not looked at this chart in a little while. What are we doing?
Dude, we're down. We're opportunity times. We're down towards, it went to a low here of 888. We're down towards 938. What I want to do really is, Chris, and we need to do this. We need to make this happen. Where is the fair days? I need to drive one of these. Wherever it is.
I know they had a New York showroom. I don't know where else, but yeah, I mean,
I'm coming, man. I'm coming, baby.
They're not going to have cars until next year, right? So this is a stock that could just move, down or sideways until they get some news out. So I'm not sure.
Here? What do we do here? What have we been talking about? Whenever we see a downtrend in SPACs, and we want to wait till we see that uptrend, what are we going to look at? The monthly chart, guys. The monthly chart is going to help us see this, because when we get that momentum back, we're going to start seeing green bars on here, not red. So let's take a look at this. If you feel your stock is a SPAC and it's going to take a little while to really start seeing that revenue come in, because it's like this, where the models aren't coming out into the next year, pay attention to those monthly charts. When you see that swing around, that's when it's a better attempt to start getting into these, versus getting caught on, let's say, even a weekly. And then next thing you know, you're like, oh, green candle. Yay. Oh, right back down below that. So look for that monthly candle to really start showing us some strength. And then we can see these come right back up roaring. All right, Chris, that's probably going to do it for us. I'm going to go ahead and end on time here for us. I know it's a little bit of a miracle there, but if you guys could do us a favor, smash that like, support Chris and I. Chris came back today. He's still not feeling absolute 100, but one thing that he is going to do is come back to give us the information that we need to be informed traders. So like always, if you guys could do us a favor, hit that like button. Chris needs some Theraflu with mojito. I can't blame him.
Yeah, I mean, I can hear it in my throat, in my voice. So, thank you guys for all the love in the chat. I wanted to be back today anyways. And, here's to some of these SPACs coming back in favor the rest of the week. So Mitch and I will be back 11 a.m. tomorrow Eastern time.
Like always, guys, we'll see you next time, and stick around. Power Hour is coming up next. They got some great interviews like always, and we'll see you next time on the SPACs Attack.